Hello there, everyone. Jeffrey Nance here with you. Welcome to another edition of Tip Tuesday. Today, we're actually going to finish off a series we started in April called Springing into Action. Earlier, we looked at our why. Why are we wanting to become traders? What are we hoping to do with the money we make from trading? So, what do we believe our goals should be? What are we going to do with this that's going to make us productive and able to use our money in an effective way as a good steward of what God has given us? Then we looked at the what. So we know that we want to get out there and we want to trade, but what stocks? So we talked about creating a watch list and having a usable and reliable list that we can refer back to and choose from when it comes to trying to determine which stocks we ought to be trading. And then we looked at when, and we talked about the importance of timing last week and catching these pivot points and understanding that in order to WIN, oftentimes we have to know when WHEN matters. So timing does matter, particularly if you're going to be doing shorter term, what we call swing trading, which is trying to catch some of these moves up, and some of these moves down. So if you're a long-term investor, the when isn't quite as important because, again, you don't really have a plan on necessarily when you're going to sell. You may have a price target in mind, but not a time period in mind. For those of us that particularly if we're using some type of vertical spreads, debit spreads or credit spreads, we're going to need to have an idea as far as timing. And then when it comes to just our swing trading, the movement from support to resistance or from resistance down to support, we're going to need to have an idea of when on that. And obviously our entry point matters. Today, we're going to look at where. So we're going to be looking at 3 different brokerage houses just to kind of give you an idea of what does it look like? So if I move from one broker to another, I set up an account with one broker over another, does the platform really look that much different? Am I going to be able to navigate a new platform? So if I switch from one broker to another, am I going to be able to make trades, or am I just going to be so lost that I'm like, I don't have a clue how to trade out of this platform? So we're going to look at 3 different platforms. What you're going to see is there's actually quite a few similarities in a lot of these. What we're going to do is we're going to look at basically doing essentially just a straight stock. So buying the stock, what would that look like? Then we're going to look at buying, say, an option. What would that look like? And then just how do they handle spreads? So if I'm doing a multi-leg trade, what does that look like? And so what are some of the similarities? What are some of the differences in some of these different brokerages that are available? So I'm going to go ahead and share my screen now. Because I want you guys to be able to see these different brokerages. And what you're going to find is that really some of them are very different in some aspects, but really a lot of them are going to be very similar in some respects. And I want you to really focus in on that. So notice that there are going to be differences from one broker to another, but there's also going to be a lot of similarities. And I really want you to focus on that as we go through these different opportunities here. All right, so let's go and bring up the first one here. Now, this is going to be charts by Tradeway. And one of the benefits of charts by Tradeway is that you can link up your broker directly to that. So if you go over here, you can see down here at the bottom, I have a paper trading account set up. And then they have a number of different options that you can choose from as far as brokers that are tied into the charts by Tradeway system so that you can actually just trade right from your chart here. So you go over here, you look at your chart. We're just looking at AT&T today, not necessarily because we want to go buy it today. We're just saying, hey, let's just use that as an example. And let's say that I wanted to just go buy AT&T here. It closed today at around 1935, it looks like. So I want to go buy that. How would I do that in this system? So with this setup, and by the way, this is kind of the way that the Tradier system is set up, what would that look like? So you go over here. Well, I don't know why this came up differently this time. Go away. I got it. I know I'm sharing. Hide. All right. So I'm going to go over here and I'm going to bring up an order ticket. Okay. So an order ticket here. So again, this is just our virtual account here. So what does this look like? Well, I typed in T. All right. So let me just get rid of that. So it's just blank here. All right. So I typed in T. Obviously, that's what we're going to look at in each one of these. So just very, very simply hit T. You'll notice over here it says stock ETF. All right, hit enter. Now it populates to 100. Obviously, I can change this to any number ranging from 1 up to, millions, really, right? So you could change that and adjust it accordingly. But I want to go buy. Yeah, that's correct. Now I have other options I could do. I could sell short. Well, we're not going to get into that today. All right, I could do that, but I'm not going to do that. Order types. There's quite a few here, but basically just know, guys, when you're buying a stock, you're just going to do essentially a market order. The difference between the bid and the ask is going to be very, very minimal. So we're just going to probably stick with a market order here. Later on, when we start dealing with options and particularly our vertical spreads, we're going to use more limit orders. You can see that it's got market and limit. Those are our two primary orders that we're going to use to basically buy something. So when we're opening the position, we're going to do either a market order or a limit order. Once we enter the position, we could set a stop or a stop limit. You can see trailing stops here. You can sell at the close, buy at the open. They've got a bunch of different things available to you here. We're just going to mainly focus on just the market and limit because we're really just going to focus on basically the buying element here. So from here, I say I want to buy 100 shares. I go over here. It tells me how much would this cost. And then I hit review. And then at this point, guys, look, it's really, really simple. So it's 100 shares of AT&T at 1938. The time in force is a day order, meaning it's got to execute like today during the market trading. And then look what's next, submit. And then once I hit submit, then this order is pretty much going to go through. So just like that. Okay. So there's the essential charts by Tradeway linked up to your basic virtual account, but you could do this in the context of any of your normal accounts as well. So if you have a regular account set up with them, Tradier or whatever, going to look very, very similar to this. You would be able to trade from this platform. It would be linked into your broker. So again, very, very simple there. Okay. All right. So now let's take a look at Tastyworks here. And we'll type in T again. So T. Now with this one, I got to be a little bit more familiar with what I'm doing because I got to pick the strategy. Now, guys, the strategy here is really super easy if we're buying the stock. So I'm going to go over here to where it says go. I'm going to click this little drop down arrow right there. And guess what? I'm going to go to stock. All right, now it tells me, do I want to sell? Do I want to buy? Here's my quantity. Again, very, very similar. Very similar. Now, the makeup, right, the way that the screen looks is very different, but the action and the general activity, very similar. You're going to sell short or you're going to buy. How many shares do you want? Do you want to do a limit price or a market? Again, we can go limit or market here. You see they have the stop market and stop limit as well. Over here, time in force. All right. So what I want to do from here, I could review and send. I make sure that everything looks correctly. On my next screen, I hit, submit or something like that. Voila. There we go. All right. Now we've got another opportunity here. I'm going to bring this one up for you as well, just so you can see. Oh, it logged me out. So I'll do this one just to kind of give you an idea of what another one looks like here. We'll show you what this looks like. I didn't think it was going to log me out, so hold on just a second here. I'll bring it back. But as we look at this one, again, you're going to notice some very, very similar things with it, particularly when you are buying the stock. So buying the stock is going to be fairly straightforward across almost all platforms. I'll bring it back here now. And basically, again, you can see, all right, what am I looking at? I'm looking at option at change. Okay, so I don't want to do that. So again, this particular platform here makes it super easy because I go in, I say, what am I trying to trade? Oh, I'm trying to trade a stock. All right, well, which stock am I trying to trade? T. Okay. All right, so now it loads it up, tells me a little bit about what I'm looking for here. All right. Cool. All right, good. It's all good. All right, there we go. All right, so now I click on T. It's bringing up a bunch of stuff that I don't necessarily, need. Some news over here and all that stuff. Right, so I'm not too interested in all that, but you can just see here that this is kind of what we're used to seeing, right? I mean, we kind of say, all right, so I'm going to buy a stock. I'm going to go in here. It's going to tell me a little bit. This is charting some after hours stuff, so don't get too caught up in all that. But let's just say, you'll notice the spread is a little crazy over here. That's because it's after hours trading, and this one is charting after hours stuff. So didn't necessarily want it to do that, but nonetheless, here we are. So I have to be a little careful about what I do with this one. But yeah, here's T. Again, limit order or market order. What's the price that I want to enter? Again, normally this would be, so normal extended hours. Nah, normally, so you wouldn't have that. But again, what do we want to do? We want to buy. Here's the price. And normal, we would just click from here and just say buy. Of course, now this is doing after hours stuff, so it's going to look a little bit different. Just keep that in mind. That will look a little crazier, a little different than some of the others because it is charting some after hours stuff. Okay, easy enough. All right, so now let's do T again. This time we're going to go over here. I'm going to go to order ticket, but this time we're going to go to options. This lists them as options or multi-legs. So I'd have to kind of know a little bit about, what am I doing? Am I doing a call? Am I doing a put? So buy to open, okay, one contract. What's my expiration? Now, of course, I would have to determine that. Just by clicking on that, you would have your different expiration dates here. Of course, then you would have to determine your strike price, and you could go from there. All right. Now, when you set this up, let me go ahead and review this. So again, so what does it look like? Buy to open one contract, control of 100 shares. What would that look like? So it tells me a little bit about what all that would look like. Okay, cool. All right, so now one of the other things we could do from here is just, again, let's just say we went to the weekly here. We just clicked on the expiration date. This is going to be pretty common right here, guys. You're going to have your calls on the left and your puts on the right. You would determine the expiration date. That's the date at which the option expires. We'll basically go and we'll just kind of look at just basically the slightly either in the money or out of the money of the 1950s. Now, this is a weekly option. You can see the bid is 15 cents. The ask is 16 cents. For the put, it's in the money, so it's a little bit more expensive, 31 by 35. So again, over here, you see green is for buy, red is for sell. So as you move your cursor back and forth, green means you'd be buying at that price. Red means you'd be trying to sell at that price. See? So again, pretty cool, pretty easy process there. So what does this one look like? Well, let's go over here. We'll go to not stock this time. We're going to go to options. Now you can see here's our option chain. We've got it set for the same date. We'll scroll back up here. We'll be looking at this. Again, we got a bid of 15 and ask of 16. You can set your default to any number down here. We do a lot of illustrations with 10 contracts, so it makes it easy just to kind of default that to 10 and then change it as you want to. Quantity, again, you can adjust over there. It will also adjust your price right here. You can see it shows you what your maximum loss is. Your maximum profit, it shows infinity here because basically if you buy a call, there's no limit on how much you could make. The loss would be basically at 5 contracts. We'll go back up to 10 because, again, it makes our math easier. Oops, I'm going the wrong way. 10 contracts, and we'll say, all right, so we're basically buying this for essentially 16 cents. So it's $160. That would be my max loss. Again, review and send. Very, very simple. Time and force, day, limit order. Okay, cool. All right, so what does this other one look like over here? Let's go and get it. Where is it? It's here. All right, so what does this look like? Option chains. All right, let's type in T. You can see it looks a little bit different. This one's going to look the most different. But once we click over here, all of a sudden you're like, oh, I see a lot of stuff that actually looks very, very similar again. You can see some in the money. So they'll normally be shaded. So it'll either be darker or lighter. It depends on how that broker is set up. So you see these are a little bit darker over here. Or grayer or something like that over here. So we're at our 1950 again. We've got essentially our bid, okay, and our ask. So we're looking at the 1950s, the 15 by 16. So again, here it doesn't necessarily do me the green and red. I kind of have to know a little bit. All right, if I'm buying, okay, so I'm going to buy at the higher price. So what does that look like when I click on that? Well, I'm at one contract. Again, I can change that super, super simple. Up to 10 contracts. I got a limit price. It's a day order and it's 16 cents. Verify. One step away from buying that thing. So again, you see puts over here on the right, calls on the left. Option chain, as far as the strike prices, are going to show me right here in the middle on almost all of them. So again, that's another one of those similarities. So again, we're just going through different brokers, but you're starting to see there's some real similarities here. See how it looks very similar. Now, again, the actual makeup is different, but there's a lot of similarities too. A lot of similarities. All right. And so finally, let's look at the last thing we'll consider here. What does it look like to enter into a multi-leg position? So in other words, I've got two options involved. What does that look like? What are the similarities and differences between some of these different brokers? We'll keep this the same. I can change it over here as far as some of the stuff I'm looking for when it comes to, what I'm doing as far as calls. You can actually go in and you can select right up here where it says calls and puts. I think it's easier once you know what you're doing to just do calls and puts, because then basically you can enter any. So let's just say you wanted to do a bull call, a bull put. You can do a bear call, a bear put. You can do it all from the same screen. So I don't like selecting these things, but again, the Charts by Treyway does have this built out. Maybe if you're a newer student or maybe a little bit uncertain with your ability to kind of understand, am I pushing the right buttons at the right time? Is this really saying what I want it to say? You can actually go in here and select these different things, but I'm gonna keep it here for now because the purpose of this isn't to go into a lot of detail about how that works. We have full 2-day events dedicated to that kind of stuff. So here we are again. We'll just do a multi-leg trade real quick just to give you guys an example of what this would look like. We'll just say I'm going to buy this leg and I'm going to sell that leg. Over here it tells me that that is a net debit of 12 cents. So basically I would be paying 12 cents for the potential to make 38 on this trade. So over a 300% return on investment. And again, you're going to be looking at a couple of things here, taking that leg and doing that. So the difference between this is basically 10 by 12 is your spread. So obviously AT&T has some tremendous spreads at 1 penny on each leg. That's pretty incredible. So again, we get a net of 12 cents here. Click trade. Again, it becomes pretty simple here. All right, we'll take a look at Tastyworks. What does it look like? All right, so we got the 1950 selected. Now I'll go over here and I'll click this one here. Green B for buy, red S for sell. Essentially now you can see that this is 10 by 12. This one reverts to the mid price. That's the way I have it set up. Again, I'm ready to go with this one. It says over here that for 10 contracts, I have a maximum loss of $110, a maximum profit of $390. So, really kind of close to almost a 400% return on investment on this particular trade setup. But it would have to obviously move our desired direction. But that's, again, Very, very similar here. Okay, very, very similar trade setup. And we'll look at the last one that we had here. So again, we have to kind of know a little bit about what we're doing here. It doesn't necessarily tell us, so I've got to kind of manipulate it a little bit here. I'm going to the 1950 and the 20. You can see that they do a green B for buy. And if I click on that again, it's an S for sell. So green B for buy, red S for sell. And then when we click on trade here, it ought to make sure we go through all the details. It's telling us that this trade is 10 by 12. It's a debit of basically 12 cents, a limit order. We have one contract of each. Obviously, we need to keep these the same. This week's expiration. So again, and just click verify from here if that's a trade you wanted to do. So I hope that was helpful for all of you guys, that you're able to see that there's a number of things that we can do, that there are certainly a lot of differences from one platform to the next, but really they actually have quite a bit in common. And I hope that you guys were able to see that today as we work through this thing. So don't be afraid of opening up a broker, going around and kind of seeing how it works, because once you have the fundamentals down, it really is just a matter of trying to figure out, am I pushing the right buttons at the right time? But we want you to have confidence in the why. Okay, we want you to know, why are you doing this? We want you to know what. So have a good working list that you can trade. We want you to understand timing and the role that it plays in your trading. And we also want you to be comfortable enough with your tools, in this case, the broker itself, to be able to make trades. So if you were to go out and use Tastyworks, Thinkorswim, it's going to be pretty similar to these. Obviously, yes, it will have some differences. Yes, you can make it more complex if you want to. But for the most part, regardless of the broker, they're going to be very similar. And I wanted to point that out to you guys today. So that would just be another hurdle that you could say, you know what? It looked like it was so high. But you know what? It's not nearly as scary as I thought. In fact, a lot of these look similar. So if I wanted to open up a different broker because they gave me smaller commissions, or they had better customer service or whatnot, you know what? Maybe I'm going to go with that. Or maybe I just like the look of this one, or I like the functionality of this one. I would say one of the biggest keys, guys, is to make sure that they're reliable. When you go to get into a trade, are they going to make that trade for you? Is that a reliable broker? When you go to get out of that trade, are they going to be there? Is their system going to be working for you and allowing you to exit that trade? So I'd say that's at the top of your list. And then obviously you can consider things like commissions and the cost and everything that's associated with that. So that's our where. So now we've talked about the why, we've talked about the what, we've talked about the when, and we've talked about the where. And guys, it's time to spring forward. So if you've been waiting and waiting and waiting, and you're just kind of piling up those excuses, let's knock them down and let's get you trading. So guys, let's spring into action. That's it for today's Tip Tuesday. We'll see you next time.